Hi, today's Sunday, August 1st, 2010. This is going to be a quick recap of the S&P 500 and also of gold. So we're starting off with the S&P 500. You can see it's a 10-year monthly chart. So each bar is 1 month. Now, July bar just closed up, so you can see that it was quite a bullish month. Buyers really took control here. But one thing to take note of is we still have a lower high and a lower low on the bar itself. So until we start seeing those higher highs and higher lows in the bars, it's important to be really cautious on the long side. Now, if we drop down to a weekly chart, go to 5-year weekly, you can get some more information off this chart. You can see that last week closed as a dragonfly doji. All right. Now, dragonfly dojis are normally reversal bars, but it's also important to note that just because it's here doesn't mean you start jumping in short. And here's actually a good example. If we drop this trend line in from this high right here to this low, this swing high right here. A couple weeks ago I actually traded this myself. Price came up into this area, this trend line, and the price action did set up on a lower time frame, so I got in short. And at the end of the week we had a nice down bar, which I felt was a good indication that bears would be in control in the coming week. And so we did have a slight push down at the beginning of the week, and then price turned around and shot straight up. Now this again is a reversal bar, right? It's an inverted hammer. So it's pretty obvious here that price can do whatever it wants. There's no guarantees in trading, and using this as an example and as a lesson, applying that here, it's important to use multiple time frames and also other sources of information to really make wise trade decisions. So moving on to the daily chart, just keep this in mind as we do our analysis. We do have some sort of reversal on the weekly, so it could potentially show that buyers are exhausted here. So this is a 2-year daily. What I'm going to do is I'm going to go through real quick and just draw some lines in here, and then I'll walk through them. But if you want, you can go ahead and pause the video, and that'd probably be a good exercise to learn this better. So going from this swing point right here to this swing point right here, I'm dropping in a line that's going to be referenced for buyers, and then going from this high right here to this high right here, I'm dropping another trend line, and that'll be a reference for sellers. Now, one thing I want to do real quick before I go any further, I'm going to go back to the 5-year weekly chart, and I want to drop in this line right here, which isn't visible on the daily chart because it's too far back, but I'll explain this in a moment. It's going to be very important as well. So let's go back to our 2-year daily, and let's start drawing in some support resistance levels. So I'm going to start with the most recent first. So the most recent would be this one right here. This is the resistance that we just broke, right? This was a previous swing high. And then we also have this swing high right here, which we pulled back off of. And then going back further, we have this swing point and this swing point as well. Let's see what else we got back here. This one seems pretty significant right here, so I'm going to drop that in. And so as price moves, I would expect these levels to be closely watched and for price to have some sort of reaction off these levels. I'm going to go ahead and drop in some more trend lines now. And we'll drop in this one right here from there to there to show, it just shows that price is starting to gravitate upwards, right? As we break these trend lines, it doesn't mean reversal, but it does mean that the rate that the market is falling at essentially is slowing down. And I'm also going to pick my channel tool here, and I'll drop that in from this point to this point, and then project that upwards onto this level here. All right. So just looking at the price action, what do we know? Well, we have a reversal bar forming right off of support, right? We have this trend line coming through. We also have a close above this recent swing point, which looks fairly bullish. Now, keep in mind, we talked about that weekly bar, which was to the downside. So just because we have that doesn't mean, like we talked about, doesn't mean get short. It just means be cautious. But if we do see a higher high here, then there's a good chance that we continue, and I would be a bull, early in the week. All right. And then, so before we go any further, one more thing I want to point out is let's see where the Fibonacci's are putting us. There's quite a few people who watch Fibonacci, so it's important to keep that in mind when you're trading. So as you can see, it's interesting because price pushed up right into the 50% mark, which is generally where a lot of people like to get short, right? But now, just because this happened doesn't mean we, jump ship and start going short. You have to keep in mind that there's also a Fibonacci on the other side that buyers are using as a reference. So as you can see here, price went up, pulled back to roughly 50% before it took off. And so if we use that pullback to most recent highs here, we can see, well, look where price came in, right at halfway, right? And then it took off again. So, as long as, in terms of a Fibonacci trader perspective, as long as these 50% retracements are holding to the upside, you do not want to be a bear, all right? So what would it take for me to get short in this market? Well, as you can see, we do have a series of higher highs and higher lows in the near term, right? So to start off with, like I said, I'm going to be a bull next week, especially if we get that higher high here. And if that's the case, I would expect the market to make it up to this swing point right here, and then also there's other key levels up here, 1150 being one of them, 1170 being the other. Now I do listen to some commentary during the week, just other traders, brokers talk, and I've heard some chit chat about price moving up to this area right here, 1150, 1170. Before longs take profits and shorts get in and drive this back to the downside. Now again, take that with a grain of salt, right? It's just talk, and we only trade what we see. We don't trade rumors. So but taking that, keeping that in mind, and seeing if it lines up any technical levels. Well, remember that line we drew in off the weekly chart? It lines up right here. And what price is that? 1170. So we do have a technical level that we could trade off this area, so that makes it a little bit more significant. And again, here we have an area at 1150, this support level. So these two levels are going to be pretty key if we do break to the upside. Once we get past here, I would think it's pretty easy ride. I'm not going to say easy, but it should be. I would assume buyers are in, and they'll drive prices up into this area. Now, let's talk about the short side. Well, again, we do have that reversal bar in the weekly. If it does play out, what can we expect? Well, personally, I think it'll be best to wait for a break and a close below this channel, this lower channel, and also a close below the low of this bar. Why is that? Well, that's because that would be a failure of the reversal bar. At the same time, that would confirm the weekly pattern. All right, if that's the case, then I would expect the market to come down further. And we do have some levels on the downside that we can watch. Perhaps this one, maybe this area through here, and then obviously this rising trend line coming through here on the longer term. All right, so that's pretty much it for the S&P. Let's go over to gold real quick. As you can see, this is a gold chart, 2-year daily. Let's bump it back to 10-year monthly. I actually haven't done gold analysis in a while, so let's see what's going on here. But different story here. As you can see, we do have a, July's bar is a down month, but we also have a lower high and a lower low, and a close below the previous bar's low, right? So it's a little more bearish. But again, look at the trend as a whole. We're making, higher highs and higher lows on a monthly chart. So definitely no reason to be taking, blind shorts unless you have a very good reason to do so. All right. If you're going to roll the dice on this thing, your odds are you're better off in a long, right? So again, look over here. This is a 5-year weekly. We have a reversal bar to the upside now. This is a hammer reversal bar, right? So keep that in mind as well. So we have conflicting monthly and weekly charts just based on the most recent bars. Now this is a 2-year daily chart. Let's draw in some lines here. If we go from this trend line from there to this low, you can see it's interesting here. We actually managed to breach this level, and we're pushing right back into it. And so what's going to happen now is people are going to come in and draw a new trend line from that point to that point now. So let's see what the seller reference looks like going from this point to this point. You can see that we're pushing right into it. So I would imagine there's going to be some sellers in here. But again, keeping in line with our weekly chart, we can see that there's a hammer to the upside. So it's going to be a little more interesting. Definitely need some more confirmation before we actually decide which way this market wants to go. And then dropping into support resistance levels, we can drop in this one right here, this swing point. And it's interesting because price managed to come right down into this level before it reversed. So it might not look bad, right? If we get a break of this level, a nice solid close, I would expect that we see some upside with the weekly bar kicking in there. But if we do see a potential drop here and we break this low and get a close below, then I would expect that price continues in that direction. We drop another level here. We have a some shelf support here, and then I'm sorry, resistance here and here, and then support in this area. And these are two of the more recent areas, and then we can go down further and start dropping these in as we go through. So this is really rough, just going through really quick and just kind of eyeballing levels that I think will be important for the market. But there's quite a bit of support through here, so it's going to be interesting to see what gold does. And I really think that this next coming week is going to be pretty pivotal in terms of what we see in the markets, because if we go back to the S&P again, you can see that if we go up from here, there's a good chance we continue. If we roll over here, then at that point we'll be breaking this series of higher swing lows and higher swing highs, and that would probably drive in some more bearish sentiment. So anyways, I don't have any particular stocks that I want to go through at the moment. If I do see something interesting, I'll probably post it on the blog as the week progresses. But I hope you had a great weekend, and thanks for watching mugtrading.tk.